Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 22nd of August. Starting off with the FTSE 100, where there seems to be a little bit of a light at the end of the tunnel, with the market effectively bouncing off that rather obscure November uptrend line. That's around 72.60. And above that, we're looking for, I suppose, a return to the area that initial July support area around 7,400, but at the moment still rather tentative. But at least there is some bullish divergence there, so slightly lower low there for August, but higher RSI trace. And the old trick of buying the market at or just below RSI 30 worked again, or has worked again so far, as it did back in July and in previous dips, especially in March. Moving on to the DAX, and here the situation is all about the 200-day line. We managed to bounce above it. Gap close buy signal yesterday, so above 15,700. Chance of heading back up towards the 50-day line at 16,000. I haven't quite got rid of that. I haven't had the nerve to, or the heart to get rid of that uptrend line from last September, because it could be a bear trap from below it. But above 15,700, looking for 16,000 on the DAX. On the Dow, and here the issue was one of the 50-day moving average as well. We went just below the old June-July resistance, 34,600, and it was sort of in a no man's land, or a no person's land, as you would say these days, between the 200-day line and the 50-day line. Still got that uptrend line there from back in October at 34,000. So hopefully the Dow has also found its support, but probably want to see an end of day close through 34,800 to confirm that, and confirm that the sell-off so far in August has run its course. On to the weak point in the markets, the major markets, which has been Bitcoin, not never been quite the same since SpaceX sold all its holdings. We had a bull trap through a resistance line there, but actually in the end it was the 50-day line which uh, prevented this market heading higher. That's up to around 29,500 or 300, in fact. And below that, we went down to the floor, that rising channel from the uptrend line there from December. That's around the 26,000 mark. There could be a final push down towards 24,800, which was the June support. And maybe then we would head higher. But it's surprising that we haven't had any reasonable positive reaction here, given that the RSI is still at 20, which is the most oversold this market has been in, well, I think over a year. I think the last time we were down at those levels was maybe in June last year, and obviously there was a rally from that point. Although I have to say, it was a rather uh, sort of tentative rally at the initial stage. So maybe we'll see something like that for Bitcoin. On to the stocks, and the first one is Arc Minerals, which I know has its fans. And here, finally, we've broken a line of resistance there from April. That was at around the 2.5 pence level. We've broken above the 50-day line as well. Want to see the this market back above, or this stock back above the old support there, the September to June support, which was around 2.94. If we're back above that, then we could say we're back in the range from from 3 to 4.5, which would obviously be a much better look than we've got at the moment. The positive as well, though, is that we've got bullish divergence going into this rally, so that does give us hope that we will get back above 3p and then make our way back into the old range, which started at the beginning of the year. Only back below 2.4 now really kills the idea of recovery on ARC. The stock which is perhaps less famous is Anexo, and here got a rising trend channel base after the rather calamitous fall that we had over the course of May, June. On full gap to the upside through a rising 50-day moving average. So the initial target here around 68 pence should be a done deal. Above 68, we're looking for the upper parallel of that June price channel, which is as high as 82 pence. And hopefully we'll see that by the end of next month. Uptrend line and a bullish divergence line there in the RSI window. So this stock is the bear trap gap reversal with bullish divergence, which tends to be one of the most reliable signals, or combination of signals around. Ideally, we stay above that rising 50-day line at 61 pence. Another stock which is on the move in a nice way is Aura Energy, and here rising trend channel base as well. Bullish divergence line, no gap here, but 2 out of 3 is not bad, and above that 50-day line at around 10.3 pence, looking for 16 pence over the next 2 to 4 weeks. In fact, hopefully looking for rather more than that. The top of the channel there from back in the autumn of 2021 is heading as high as 26 pence, but let's not get too excited at this stage. Ideally, we stay above that 10 pence zone. On to Chill, which has made a couple of attempts to head higher after the fall from 14 pence, rather painful fall, one would say. Here we had an attempt earlier in the month, which failed at a line there from back in May. That was around the 6 pence level. Maybe second time lucky for the shares now. We're still bouncing on the rising 200-day moving average, but want to see probably now a proper clearance over the that peak around 5.8 pence, 5.9 pence that we had earlier in the month, to then suggest the shares have got enough gas in the tank to head up to the 8 pence area, which was the July resistance for the shares. You're cautious, probably want to see the RSI also back above neutral 50. We haven't been back above there since the shares were above 10 pence back in June. Moving on to Canadian overseas, where the bears are hoping that this is the big turnaround for the stock. Obviously, the bears are hoping that it isn't, and the bulls are completely wrong. But at the moment, we've had a decent turnaround. We had an unfilled gap to the upside, bear trap gap reversal. One of the best signals, as I said earlier in this recording. So that actually worked, and you can see how these things work. Bullish divergence started basically at the end of June. Current situation is we've got the market consolidating above a now rising 50-day moving average, so we should get at least a retest of 4.5 pence, which was the peak earlier this month. Best case by the end of next month, up to 6 pence, while we hold above the 50-day line, which I think should be achievable, especially given the way that we had a double bounce there of RSI 50, which is in a continuation signal and seems to be working at the moment. On to a stock which is perhaps not so much in focus, but still worth having a look at. Cakebox, we had an unfilled gap to the upside back in July. We filled the gap and bounced off a rising 50-day line, so there's a chance here that shares will not only head back to £1.70, they will deliver a new leg to the upside, perhaps as high as £2.10 by the end of the next month, or maybe going into October. But the key here is holding that 50-day line around £1.50. At least then we would expect to get a retest of last month's £1.80 resistance and peak. Moving along to East Imperial, and to hear the noises regarding going to America or having a distribution agreement in America came through today. Nice bounce there on the 200-day line, which is always helpful at 1.8 pence. Above that, we're looking for at least a retest of the peak of this month at 2.6 pence, maybe over the next 2 to 4 weeks. But the key here is holding that 200-day line on an end-of-day close basis. So let's see if the shares are strong enough after today's RNS. On to Geiger counter, which I looked at yesterday, and happily, even though it wasn't a clear trendline break, it was third time lucky for the shares, breaking through the 40 pence level. The longer they stay above 40, the greater the chance of move to 52 by the end of next month. Very long dated uptrend line there in the RSI window, helping things along. On to Galileo, which sneaked out an RNS after the close yesterday. Here we've got an unfilled gap to the upside. It's a V-shaped bull flag above that gap, which looks very healthy. That suggests that on this occasion, we will break that resistance line there from October around the 1.35 pence level, and above that finally head towards as high as 2.2 pence as soon as the end of next month. But that unfilled gap to the upside in the rising 50-day line should be enough to take Galileo over the line, which in this case is at 1.35 pence. Onto a stock which I don't think anybody looks at all, but we like to be first on these things over here. Intellego, which is on the Aquis market. Here we've had a bizarre chart really, but a vertical move and an unfilled gap to the upside, higher low above the gap, which gives you the stop loss basically at 10 pence. And above that, we're guessing where the top of the channel is. I'm guessing that it's heading up towards 27 pence over the next 1 to 2 months while we're above 10 pence. So that might be an appetizing risk reward for some technical traders or fans of the Aquas market. Moving along to one of the best movers of the last month or two, and that is LungLife. We were looking for £1.30 by the end of next month. The shares have managed to do that by the end of this month. End of day close above 130 could give us an extra boost up to £1.60, which is a 1-year resistance line projection. And the upside valid here, I suppose, while we're above the £1.10 area, which was resistance on the way down. So above 110, looking for as high as 160 if we get an end of day close through the £1.30 level. Again, another classic example of a bear trap gap reversal, which we had in July, unfilled gap to the upside, and then that bullish divergence backing it as well. And it worked well. And after that, we also had a gap close buy signal on the 10th of August. So it's, again, something to learn if you're not into this kind of charting philosophy. Moving on to mode, and here we've got hopefully what looks like a V-shaped bull flag resting on the 200-day moving average at 1.07. I'd like to see an end of day close through that neckline resistance there around 1.65. If we can get that, then we should at least get a retest of the initial resistance of this month at 2.85 pence. Best case scenario target here, which seems slightly unlikely, but it's still on the cards, perhaps, with that resistance line from November as high as 4 pence by the end of next month. But 1.65 and 1.1 pence, the levels to hold there, or at least the 200-day line to hold there to get those targets. Looking at Neo Metals for the first time in a long time here, and here we've broken out of this falling wedge, which has been in place for the post-May period, broken the wedge at 26 pence, and above that we're looking for as high as 35 pence by the end of next month. All sorts of gaps and other stuff there, but we do actually have a bullish divergence line there as well. So it's a falling wedge break and bullish divergence to hopefully get us up to 35 pence by the end of next month on Neo Metals. Stock which eventually hit the target we were looking for, which was that line there at the top of that rising trend channel from this time last year. That line was there at 5.6 pence, so we just managed to hit that and come back. I suppose the question now is how far the shares can go next. Well, if we get through the 5.75 pence level, there could be another leg higher to as high as the line I'm just drawing at the moment, which is up to around 7.25. Maybe we can get that over the next 4 weeks or so. Ideally, there's no breakback below the gap floor there at 4. So above 4, looking for 7 or more on Plexus. Down to the last three, and another stock which doesn't get much airtime here anywhere actually really is ProCook. Here we've broken through the 50-day moving average. That's around 22.75, and above that, accompanied by bullish divergence, we're looking for the top of that rising trend channel base as high as 32 pence by the end of next month. Ideally, we stay above the 22 pence area in the meantime. RUA is looking like a situation which is a turnaround here after an almighty bear run there in that stock. A bit of bullish divergence there, so much lower prices there for the start of August, but the RSI up the same as it was when the shares were back at around the 40 pence level. Unfilled gap to the upside as well, so that's another tick. We need to break that line there of resistance around 22 pence. If we can do that, then probably looking at 30 pence, which was resistance on the way down back in July. So really the situation is one that hopefully will be one where we remain above the floor of the gap there around 17 pence.